Hello everyone, Group 4 here. Today we're going to be talking about the financial report of MNC Group. First off, our group consists of Rizky Ariel Budiman, Muhammad Rafa Alhamdi, Desak Nyoman Putri Alicia and Rizata Desindra.
And now I'm going to talk a little bit about MNC Group. MNC Group, founded in 1989 by Heri Tanusudibjo, MNC Group is one of the Indonesia's largest media conglomerates focusing on media and entertainment. Their company vision is to be a leading business group in the Asia Pacific in media, entertainment, financial services, hospitality, and energy through innovation and technology. Their company mission is to enhance the group ecosystem and deliver quality services that provide value to all stakeholders, including viewers, customers, shareholders, and employees.
Okay everyone, so now let's talk about the income statement of the MNC Group. Here we can see that it's from the year 2023 and the description here is in millions of rupiah. Let's see that the first aspect is the revenue. The revenue consists of many factors such as advertisement, there is also the digital, non-digital, and also the total. Then there's also the content and IP, their subscription, and also others, which totals the revenue to 8.547.959 million rupiah. There's also the elimination, where if we add the elimination, the total revenue would total to 7.783.253 million rupiah. After revenue, there's also direct costs, which is the program and content expenses, and then there's also the depreciation and amortization expenses, which totals to 4.169.793 million rupiah. If we calculate it, the gross profit will be 3.613.460 million rupiah. And then there's also other factors such as general administration expenses, finance costs, interest income, loss on foreign exchange net, other charges net, which totals to our net income for the year is 1.091.547 million rupiah.
Okay, I will explain about asset from MNC. So for the total current asset is 12,910,138, and for the total current asset is 9,855,425. And so for the total asset of all is 22,765,563.
Okay guys, now so we move on to the liabilities. There are two liabilities. There's current liability and there's also a non-current liability. The current liability totals to 1.226902 million rupiah. For the non-current liability, the total is 617,515 million rupiah, and if we add those up, the total liabilities is 1.844.517 million rupiah.
Next are the equity. In the equity, there are capital stock, additional paid up capital, other capital for employee stock option, other comprehensive income, other components of equity, appropriated and unappropriated. The total of those things are 23,039,699. And there are also less treasury stocks for 2,973,960. Next is the total equity attributable to the owner of the company for 20,065,739. Non-controlling interest 855,407. So for the total equity, there are 20,921,146. So to combine total liability and equity, there are 22,765,563. Next are the liquidity ratio analysis for the current ratio. So the formula of current ratio are current asset divided by current liabilities. So for the current asset, there are 9,855,425. The liabilities are 1,226,902. So if we divided current assets and liabilities, we have a current ratio of 4.7186495. Next is the liquidity ratio analysis for the quick ratio. For the formula of quick ratio are current asset minus inventory divided by current liabilities. Current asset of MNC Group are 9,855,425. The current liabilities are 1,226,902. For the inventory, there are 3,794,661. So, based on this calculation, we have a quick ratio of 2.92644 and 55.
Okay, so in this slide we are analyze the inventory turnover ratio, which show how many times a company inventory is sold and replaced over a period. The formula for the inventory turnover ratio is cost of goods sold divided by inventory. And for the cost of goods sold is 4,169,793, and the inventory is 3,794,661. By dividing these values, we get an inventory turnover ratio of 1.10 times. Which means the inventory is sold and replaced approximately 1.10 times during the period. Next, we have the total asset turnover ratio. This ratio measures a company's ability to generate sales from its asset. The formula for total asset turnover is sales divided by total asset. In this case, the sales amount is 7,783,253, and the total asset amount to 22,765,563. Dividing this gives us a total asset turnover ratio over 0.34 times. This shows that the company generates 0.35 times its sales for every $1 of asset. Okay, now we'll look at the receivable turnover ratio, which measures how efficiently a company collects its receivable or the money owed by customer. The formula of receivable turnover is revenue divided receivable. Here the revenue is 7,783,253, and the receivable total is 2,987,519. Dividing these two values give a receivable turnover ratio of 2.61 times. And this means the company collects its average receivable about 2.61 times during the period. So lastly, we have the average collection period, which tells us how long it takes for a company to collect payment for its customer. The formula is 319.5 days divided by inventory turnover. With an inventory turnover of 2.61, the average collection period is calculated as 365 divided by 2.61 equal 140.10 days. They show that on average the company takes about 140 days to collect payment for its customer.
Okay, so now let's talk about the debt ratios. The first one is debt ratio, which measures the proportion of total assets financed by the firm's creditors. The formula is total liabilities divided by total assets, which you can see here that the total assets of the MNC Group in 2023 is 22 trillion rupiah, and then the total liabilities is 1 trillion rupiah, and then we divide those two factors and end up with a debt ratio of 8.1%. For the debt to equity ratio, it measures the relative proportion of total liabilities and common stock equity used to finance the firm's total assets. The formula is total liabilities divided by common stock equity, where we can see here that the total liabilities is again 1,844,417,000,000 rupiah. Which we can see also the common stock equity, which is capital stock, plus additional paid up capital, plus unappropriated retained earnings, which totals to 21 trillion rupiah. We just divided those two factors and we will end up with 8.5% of debt to equity ratio. And now we're talking about the times interest earn ratio. This measures the firm's ability to make contractual interest payments, sometimes called the interest coverage ratio. So the formula is EBIT divided by tax. The EBIT here is gross profit subtracted by G&A expenses, which totals to 1,500,000,000,000 rupiah. For the taxes, this case is income tax expense. It totals to 228 billion rupiah. We just divide those two factors and we'll end up with the times interest earn ratio of 15.8. Now we're also going to talk about the fixed payment coverage ratio, which measures the firm's ability to meet all fixed payment obligations. The formula is, as you can see here, earnings before interest and taxes plus lease payments divided by interest plus lease payments plus principal payments plus preferred stock dividends times 1 divided by 1 minus t. As you can see here, the total, the data here is, as you can see on the screen, and we can move to how we calculate this. There's a total of 3 steps here. As you can see, we first calculate the numerator and then we calculate the denominator, which in step 3 we do the final calculation, and the total FPCR is 1.68.
Gross profit margin. So for the formula is gross profit divided by sales. Gross profit is 3,163 rupiah, and for sales is 7,700 rupiah. And we just divide those two factors and we'll end up with 40.6%. Operating profit margin. So the formula is operating profit divided by sales. The operating profit is 1,300,000 rupiah and sales is 7,700,000 rupiah, and we just divide those two factors and we'll end up with 16.96%. Return on total asset. So the formula is earnings available for common stockholder divided by total asset. Earnings available for common stockholder is 1 million rupiah and total asset is 22.700 million rupiah. And we just divide those two factors and we'll end up with 4.79%. Return on equity. Return on equity. So the formula is earnings available for common stockholders divided by common stock equity. Earnings available for common stockholders is 1 million rupiah and common stock equity is 21.400 million rupiah. And we just divide those two factors and we'll end up with 5.1%. Net profit margin. Net profit margin for the formula is earnings available for common stockholders divided by sales. Earnings available for common stockholder is 2 million rupiah and for sales is 7,700,000 rupiah. And we just divide those two factors and we'll end up with 25.9%. Earnings per share. So the formula is earnings available for common stockholder divided by number of share of common stock outstanding. For the earning available for common stockholder is 2 million rupiah, and for the number of share of common stockholder is 1.500 million rupiah, and we just divide those two factors and end up with 517.2%.
Now let's talk about the market ratio analysis. First off, we're going to start with the PE ratio or price earnings ratio. This measures the amount that investors are willing to pay for each dollar of a firm's earnings. The formula is market price per share of common stock divided by earnings per share. Yes. So we can see here the net income is 2 billion rupiah, and then the number of outstanding shares is 1 billion shares, and then there's also the market price share which is 328 rupiah. So you can see here the steps, which then leads us to the PE ratio of 245.16. And then here we have the last ratio analysis, which is the MB ratio or the market book ratio analysis, which provides an assessment of how investors view the firm's performance. As we can see here, the formula is market price per share of common stock divided by book value per share of common stock. And then for the calculation of the book value per share of common stock is common stock equity divided by the number of shares of common stock outstanding. And here we provide the data. As you can see, there's a common stock equity, there's book value per share. First off, we calculate the book value per share, which we have here is 14.2648, and then we calculate the MB ratio, which we can see here amounts to 22.3 rupiah. So there you have it. That is the financial report of MNC Group and also our ratio analysis for the MNC Group financial report of 2023. I hope you guys learned something new. I hope you guys learned a lot from this video. And till then, see you guys next time. Bye bye.